Imagine waking up 20 years from now, opening your investment account, and seeing that your very first $1,000 has grown into tens of thousands of dollars. Sounds impossible? It's not. The biggest mistake most beginners make isn't investing in the wrong stock. It's waiting too long to start. Today, you'll learn exactly how to invest your first $1,000, even if you've never bought a single stock before. Every dollar you invest has one incredible superpower: time. While money sitting in a regular savings account barely grows, money invested in quality businesses has historically grown much faster over long periods. Of course, markets go up and down, and investing always involves risk. But staying invested for the long term has often rewarded patient investors. The earlier you start, the harder your money works. That's why many millionaires didn't become rich overnight. They simply gave their investments enough time to grow. Before buying your first stock, ask yourself one question. If my car breaks down tomorrow, do I have emergency money? If the answer is no, build a small emergency fund first. Also, pay off high-interest credit card debt before chasing investment returns. A strong financial foundation makes investing much less stressful. Now it's time to open a brokerage account. Choose a platform that's easy to use, has low fees, and allows fractional shares. Fractional investing means you don't need hundreds of dollars to own companies like Apple or Amazon. Even $20 can get you started. Technology has made investing easier than ever. Here's where beginners usually make a costly mistake. They see social media saying, "This stock will double tomorrow," so they invest everything. Most lose money. Instead, think like a business owner. Would you rather own one risky company or hundreds of great companies? That's why many long-term investors choose broad, diversified index funds instead of trying to guess tomorrow's winning stock. If you had your first $1,000, here's one simple example, not a guarantee or personal financial advice. Around 70% in a diversified index fund, 20% in strong, established companies you understand, 10% kept in cash for future opportunities. The exact percentages depend on your goals and risk tolerance. The important part is diversification. Never put all your money into one investment. The real secret isn't your first $1,000. It's your next $100, and the next, and the next. Set up automatic monthly investing, whether it's $50, $100, or $200. Consistency beats trying to perfectly time the market. Successful investors build habits, not excitement. Avoid these beginner mistakes. Checking your portfolio every hour. Buying because everyone else is buying. Selling during every market crash. Trying to get rich in 1 week. The stock market rewards patience, not panic. Your first $1,000 won't make you rich overnight, but it can change the way you think about money forever. Every millionaire investor started with a first investment. Today, that first investment could be yours. Start small, stay consistent, think long-term, and let time do the heavy lifting. If you found this helpful, subscribe for more smart investing strategies and financial education.